following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, Tom, you really assembled a stable of amazing people. I mean, they all have different strengths, different areas. And,
Yeah.
Man, each one is a superstar in their own way. I've seen it over the years.
Well, listen, man, we appreciate you being out there growling and prowling with us. If you guys and ladies and tigers and tigresses weren't out there, folks, we would have zero.
Yeah, it's unique, and it's and it goes back to your basic belief of an open platform, which I've heard you say that years ago.
Right.
And it's really bearing fruit now, I would say.
Yeah, I agree. It is.
Yeah.
Cooking, brother.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Release the need to be right. When you believe something, you assume you are right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We have the Dow Industrials up 37, Nasdaq's down 5, S&Ps are up 2. Flat market all day long. Gold contract up $2.10, trading at $12.89. That had a low of $12.80, rejected lower price. You got it up at that $12.89. It looks like it's going to try to make a run inside that $12.90 to $12.97. $12.97 is the big number to keep an eye on. I suspect that'll be tomorrow. Silver is up 6 cents now, trading at $16.89. We go over and we take a look at that silver market. This is what you have happening in silver. Silver got down to a low today of $16.70. You're at $16.89. You've done 65,000 contracts, so that's dynamite because you got into lower price. You had lighter volume. Now silver's got to get inside $17.10. $17.10 is where it broke out. Top side on the 28th of August. That's your benchmark out here. Notes. Let's do oil first. We take a look at the oil market. Oil market is down 61 cents, $51.53 a barrel. We get over and we take a look at this oil market. What we have with oil right now, we're down 1.1%. You've done 768,000 contracts. Let's see what she's looking like. So, yeah, you got big volume, so you're going to be back up there. Okay, so your swing point that oil's going after is 52.62. Oh, and it hit it. How cool is that? Okay, so here we go. May 25th, you had a you had a high of 52.62. We got to 52.86 today. You got up there. It failed to hold price. That being said, you got monster volume. This thing is going to be right back topside. It looks like oil does want to get up into this 54.94 level, which is the swing high from the 12th of April. That's going to be intriguing watching that thing shake out. Notes. 10-year note, up 3 ticks, 125.17. 30-year bond down 5 ticks, 152.25. We take a look at the 10-year first. What you have is this. We broke with volume yesterday. You had wide price spread. You got an ABC structure on the way down. The break was 125.17. That's right where we're at right now. We'll see whether this is going to turn into a complex ABC structure on the way down. Be intriguing if it does. Bottom line is that you get an ABC down that has a price projection under this 124.14, which is the low of the July 6th time frame. Now, the 30-year is also an ABC structure on the way down. The wild thing about the 30-year is that your price projection is the lowest swing point on this contract at 150.11. Right now, you're at 152.25. We broke down yesterday. You broke down with volume. Today, bottom line, you got to a lower price. Volume, still real big, actually. 314,000 contracts. You're at 152.25. Now, in order for bonds to actually break down, they have to get under 147. Doesn't look to me like we're going to get, well, we're not going to get, I don't expect we're going to get it on this move, that's for sure. King dollar, what do we have with King dollar? King dollar out here, folks, trading at a price point of 92.975. The swing point that King dollar has been going after is the August 16th swing high. That's 93.840. Now, what you have is this. King dollar today, yesterday you did 32,000 contracts, prior day 32. You can see what's happened is that King dollar came off the bottom being on September 8th, and built some cars, went sideways, had a couple nice days of strength, went topsides, trying to get into this. This is going to get intriguing tomorrow, and this is why. We got over the highs of yesterday, the day before. It looks like we're going to close under both of those. So what that sets up, now that's going to set up another high, another test of the 92.495. That's where we had strength on the 20th of September. If you get into that bar, like let's say we get into that bar a couple hundred ticks, that's going to be trouble in paradise for good old King dollar, because what that's setting up, it looks to me, it has looked for a long period of time, that what King dollar is actually doing is that it finally had got a small bid. You know, 4 weeks ago we were down at 9,900. We got up to 93,495, but King dollar looks to me like it wants to make a very large ABC structure down going into this 88 area. And we'll see how this shakes out. You know, because if you break 88, you're at 81 in about a heartbeat. You know, thus far, King dollar would have to get basically inside the 94,470 mark in order to really sustain and get to higher price. Some of the higher volume stocks in this market, and this is going to be a big low-time volume market out here today. You have Micron Tech is up $1. You get Chesapeake Energy down 8 cents. Apple's off $1.15. You get Ford up a penny. Pfizer is up 21 cents. Let's go into the IBB. I see Gilead is down 380. That's not affecting the IBB. If we go over to Gilead, G-I-L-D, we take a look at that. That's down with some juice, man. Okay, so we get this action here. That's down 380. That looks like it's going to make its way back to $75. Right now, you're at 79. AMGM. Let's look at Amgen. Amgen hasn't been able to hold price today. Got to 187. You're trading 185. Biogen. Going a sideways move. The Biogen is right now down $1. Over to the NDX 100, Apple pulling back $1.13. That's on light volume. Facebook up 76 cents, and that looks like it's setting up for a retest of the low that was established out here on Monday. You come down with 41 million shares. Today you're up 110. You stay right there, folks. We'll be coming right back. Dow Industrials right now are up 46. NASDAQ is down 3. S&Ps are up 2.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are up 44. You get the Nasdaq down 4. S&Ps are up 2.5. Let's go over to our man, Mr. Andy Hecht, as we do every Tuesday and Thursday. Don't forget, folks, Andy's got a great show right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Now, no matter where you're listening right now, if you happen to be listening in your car, remember you can get us 24 hours a day right on your cell phone. You go to TFNN.com. 5 to 6 o'clock tonight. Andy's got a great show. You just hit TFNN.com on your cell phone, hit Tiger TV. Now, as you come over to TFNN, folks, you're going to see right on the carousel, Andy Hecht, free access to lesson 1 of Andy's 12 essential lessons for trading commodities. Right now, we got a special going on, and what that special is this. Andy did an outstanding workshop. It was really like just a huge course. It was 12 parts of that course, the 12 essential lessons for trading commodities. You can come over, you can test drive either his daily newsletter or his weekly newsletter, okay? Bottom line, at either one of them, you will get the full 12 months. We're going right into October, Monday. Right now, the September one will be on your website. As soon as you hit the button and test drive it, October, which is market breakdown, physical versus derivatives, will be there. November, he's going to be doing the overview of market structure. December, backwardation and contango. Check it out on the front page of TFNN.com. Andy Hecht, what's going on?
Hey, Tom, how are you?
I'm doing great, man. Yourself?
I'm doing good. I was listening to you talk about the dollar before the break.
Yes.
And, I'm looking at this thing, and I've been looking at it this morning. I'm kind of getting ready. We have the end of the quarter coming up tomorrow, which is always an interesting time for window dressing and all those kinds of things.
Sure.
The dollar really needs to get, the dollar index really needs to get above like 93.84 to break this pattern of lower highs.
Yeah.
And it's struggling.
It is, man. To me, today was a big day, because what happened is that you had the contraction of volume. You're going to close under the highs of the last 2 days. That says that, okay, now we're going to test where that strength was. And tomorrow, as we know, whether it's metals or the dollar, that's when you have the volatility in the currencies and in the metals, folks. Okay, so if you test that and you get into that bar that's saying, hey, guess what, man, you can go break that bottom out, man.
Right, right. Yeah, and to me, that's the technical look. From the fundamental look, I'm looking forward to the fourth quarter and what's bullish for the dollar on the horizon. So, we already know that the Fed's going to hike rates 25 basis points in December. I think that's like kind of a given.
Yes, I'd agree with
that.
That's baked in.
Right.
It should be baked in. They've told us enough times, right?
Right. Exactly. That's baked in, and it's in the oven, and it's almost cooked. So the other things to look forward to in Q4 might not be so bullish for the dollar. Okay, so you got the administration going forward with the tax reform plan, which is likely to hit the same kind of roadblocks that healthcare hit in the Congress and in the Senate. All right, so that'll be a kind of a disappointment for the dollar. And then you also have the other thing with the dollar coming up in Q4. It's a very difficult overall situation here. You have the ECB, which, listen, negative 40 basis points on European interest rates and quantitative easing in Europe is coming to an end sooner rather than later.
Right.
And when that comes to an end, the euro is going to rally.
Yeah.
And you know what's going to happen to the dollar? It's a mirror image. It's going to fall.
Right, it
is.
So,
and that could happen in Q4 or Q1 next year. And, I'm very concerned. I think we're going to see an 80 handle on the dollar index.
Well, we're going to be really happy with our metals then.
We will. Now, I don't know whether that's coming, in Q4 or Q1 next year, or where this is gonna come from. We're going in at a difficult point with the gold and the silver here. They're sitting right around kind of support areas. I kind of like the action today. I wonder whether it isn't a little. We're having a positive quarter in precious metals. Window dressing starts today and ends tomorrow. So we'll see next week, what these markets are made of.
Yeah, it's, the way I look at the metals right now, they came back to where they should have come back to. They had the contraction of volume. Now the bottom line, they got to prove themselves again.
They got to prove themselves,
right.
No question.
Got
to prove.
Now
copper,
the equities though, the equities acted great and have acted great.
Well, of course.
No, meaning versus the
the gold equities. Yes,
exactly.
Yes. Yeah, but again, we have to say that gold and silver have had a positive quarter. I think they're up 5% in that sector.
Yes.
You do want to see those gold shares, those silver shares, the fund managers that are long them. They're going to get paid on tomorrow's results, closing price.
Right.
If they're long, they want them as high as possible.
Yeah, no doubt. No doubt.
That's a question of the pay deals. Now, within the precious metal sector, we're seeing divergence. Listen, platinum was a dog since 2014. It was a dog with fleas when it went to an all-time low against gold. And now, at a discount to palladium, this dog is getting mangier by the day.
There's no doubt, man. I mean,
that's a frustrating trade, long platinum here. No question about it. I mean, platinum's going to probably put up a gain for the third quarter, but this is a laggard with a capital L. No question about it.
Well, see, this is what's cool, right? So I wouldn't say that it's a. What kind of trade did you say it was? I don't. My take on platinum, it's terrible. Okay, in the context of it won't move.
It's a frustrating trade.
Yeah, but when I look at the aspect, I think you'll feel the same way. But I just wanted for the listeners, I've owned both. I mean, if you own palladium and you own platinum, folks, okay, the difference is dramatic. I mean,
it's dramatic.
It's like not even close. It's like, so when I'm buying something, particularly something that is a hard asset, and I want to feel and platinum is like 10 times better in my perception than palladium. I mean, it's like
it's a lot denser. So when you
yeah,
hold both
it's like
in your hand,
you feel like
it feels like something.
You can't break it, but you feel like you can take platinum and just bend it. Where
Listen, you look at the chemical properties. Platinum has a higher boiling and melting point. It's a denser metal, and certainly at a discount to palladium, it is a substitute.
And what also happens is that, guess what? When you're talking jewelry, folks, bottom line, you don't buy palladium jewelry.
No, you do not.
And a lot of people won't buy platinum jewelry because they think it's silver, but it's not. It's
right. Well, it does. Both of them don't tarnish, so that's the upside for it. But these are industrial precious metals, and at a discount, I mean, it's a no-brainer in my mind. It's the thing that will eventually ignite platinum, but industrial consumers.
Is that as if we live as long as Hugh Hefner did?
Oh, God bless him. Oh, rest in peace.
Stay right there, folks. Andy and I are coming right back. Our phone number is 877-927-6648. Right now, you get the Dow up 32. NASDAQ is down 10. S&Ps are up 1. We'll get it right back.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Heck. We are talking markets. We are talking commodities. And, of course, don't forget, Andy's got a great show right here, folks. 5 to 6 Eastern Standard Time every Tuesday, Thursday. Just get it right on your cell phone. You go to TFNN.com. You hit Tiger TV. Okay. So.
Because quarter is ending, so I do a lot of kind of reports and stuff like that. And you know, I've been thinking about how much uncertainty we're going into Q4 with. I mean, we have quantitative tightening, North Korea, we have an OPEC meeting, we have, you know, those are the uncertainties. The certainty is the rate hike. So it's going to be real interesting in the months ahead.
I think there's no doubt that what's intriguing here, that I'm sure that, you know, most of us are thinking about it, say, okay, so we've had quantitative easing for 10 years, right? So if we're going to get back to a normal situation, is it actually going to be tightening? Is it going to take another 10 years? Like, maybe it will.
Who knows?
But in that context, if that's the case, what does that mean for the equities as the vice keeps getting, you know, pushed on it versus the real kicker here, folks, is going to be, if they actually do it, are they going to create more money or are they going to destroy money? I have a hard time comprehending they're going to destroy money.
Right,
do you know what I mean? Because
yes, I do.
Yeah.
I do. But you know what? You know what's really interesting here? Look, and just bear with me on this one for a minute. The equity markets are transparent, right?
Yes.
We can watch them. We watch the prices of the individual stocks. You know, we talk about that on TFNN every day. We're not the only ones. You know, there's a lot of other media. People concentrate. It's very easy to really get granular in the stock market. The bond market is a different animal. It's opaque. The transparency isn't great. You got a couple of financial institutions. Look, I worked at Solomon. I sat next to the bond dealing desk. That is a world that is very narrow. We watch the bond futures. We watch interest rates go up and down. But when it comes to the granular basis of bonds, whether it's government bonds or corporate bonds, they have different maturities.
Yeah, because you're the market, right? That's, I mean,
right.
Yeah, right.
Right. So that's why I think quantitative tightening could be very. First of all, I think it's going to create a boom franchise for the financial institutions that trade bonds, because the volatility is going to expand and the spreads are going to widen.
Right.
So they're going to make a lot of money.
Right. Yeah.
How it affects markets is going to be very interesting, because it's going to be very hard to follow on a daily basis, Tom, because we really can't watch the instruments that are going to be affected.
Yeah. So what Andy's saying here, folks, is that we don't really know where a bank is going to know how much is going to get contracted in the market each day. That's and if that contraction, you know, so the theory goes, folks, is that as we've been easing over the years, let's say if the Fed put 100 billion in, 180 billion in, you know, to all these banks every day or whatever, it's like they're going to put it to work. They put it in the market. The real question is, now we'll find out through the repo market how much they're taking out, but you don't find out, like what Andy's talking about, like, okay, you get a big operator that's going to move because the tightening is going to get heavier. Okay, as money comes out of them, just out of the system in general, it's like, where's it going to come from? You know, so
that's exactly right. And you know, we get to look at volume and open interest and all kinds of these things in the indexes and in the individual stocks. In the bonds, it's an enigma. The transparency is terrible. And it creates a wild franchise for the big financial institutions of the world, who I think, as the third quarter comes to an end, are licking their chops.
Yeah, no,
because they're gonna make a lot of money.
You know, let's see. So they have it. You know, the XLF broke topside, but it doesn't have any conviction yet. You know, so it'll be interesting to see. It doesn't mean it won't. You know, it's taken a long time to get over this high from July, but it did it. And you know, the volume's not that bad yesterday. So
yeah. So meanwhile, let's go back to commodities. Oil is looking pretty good to me, Tom. It still looks good even with this sell-off today.
Yeah.
You know, we're seeing crack spreads. You know, very interesting. Oil is higher than it was last year this time. And both the gasoline, which it's now off-season, and the heating oil crack spread are way higher than they were last year this time. That's very supportive for the price of oil, in my opinion, as is the Brent WTI spread, as is the fact that short term, the markets are both Brent and WTI are in backwardation, meaning that the nearby prices are higher than the deferred prices, showing some supply situations in these markets. And I think crude oil is going to make a new high on the year in the weeks ahead. I think, it's not a lot.
What is the high for the year?
55.24.
Oh, that means yeah, I can see it going to that swing of April. That means it's going to be over that, though. Interesting. Okay.
Right. I could see it going to 55.40 and then turning south. And then we'll say, hey, it made a new low by 15 cents in June.
Yeah.
It made a new high by 15 cents in whether it's October, November, or December. And that's what crude oil did this year. And $50 is the sweet spot.
So, what's intriguing there is that maybe the dollar, will get destroyed again, because the first time, folks, when the dollar was getting destroyed, oil really wasn't getting the pop. Now,
Right.
when the dollar was going up, oil said, I don't care about what the dollar's doing, it went up. So it's
Right.
going to be intriguing now. If the dollar goes down, then oil would have a real excuse to go higher.
Yeah. Well, as of today, it's very interesting. The dollar is down about 2.6%, the dollar index for the quarter. And commodities, if I look at the 29 commodities that I watch, they're up about 3%.
Okay.
All right. I mean, now 22 of the 29 commodities are higher. You had some big gainers and some big losers in there. For example, lean hogs were down 35%, which weighs on the composite. You had bigger, the biggest loser was a lot bigger than the biggest winner of the quarter. So that weighs on the composite. But overall, commodities haven't really exploded out considering what the dollar has done.
No, they haven't. Yeah.
But the leading sector in Q3 and so far in 2017 for the first 9 months is base metals. And that's really important. The copper, aluminum, nickel, lead, zinc, tin. Actually, the biggest winner is aluminum.
Is it? Interesting.
This quarter. And you know why that is? That is because the Chinese seem to be getting serious about pollution, and they're cutting back aluminum production, which makes a real mess, for the air quality.
Yeah.
And that's causing. And look at what Alcoa stock has done, AA has done over the course of this quarter. I mean, that thing has exploded, Tom.
That is interesting.
So
And that's been a dog forever.
It was a dog.
It was $30, folks. June 30th. June
Right,
20th.
what is it today? 45.
Yeah, it's $46. Yeah.
Yeah. I mean, that's very, very interesting. Very interesting in these markets. And if the dollar is entering into a long-term bear market here, watch out. These commodity prices. Listen, here's one other example. What you saw in grains after that really, really bearish WASDE report was that grains ran out of selling. Grains basically ran out of selling. That could happen in a lot of these raw material markets.
Oh, there's no doubt, man.
Yeah.
Listen, folks, right here, 5 to 6 o'clock tonight, just go TFNN.com, hit Tiger TV. You're going to get a great program. Andy, you have a great one, safe one. Look forward to the program.
Thanks, Tom.
Thank you. Stay right there, folks. We're coming right back. Dow Industrial's up 29, Nasdaq's down 10, S&P's are flat. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look inside the indices and see strength versus the weakness out here. Inside the Dow Industrials, what you have, McDonald's is putting 26 positive points into the Dow. United Health 12, Home Depot 9, Goldman 6, ExxonMobil 6. Taken away from it is United Technologies minus 11, Boeing minus 10, Disney minus 8, Apple minus 7. Inside the NDX 100, strength versus the weakness out here. Strength is running out. AMAT 3.4% in the positive. That's up $1.67 after a big day yesterday. INCY is up to 2.5%. You get Micron Tech up another 2.4%. Taken away from it, Gilead, that just started getting hammered. That's down 4.5%. You get QVC off 3.5, Mylan Pharmaceuticals off 3.3, and 21st Century Fox is off 2.9. Let's go over to Gilead for a second. Gilead right now traded down to a low out here intraday of 79.24. It's intriguing as to what's going on with Gilead. Oh, I see what's going on. So the chief operating officer has plans to retire. That's what happened, because this was an intraday move. Market basically didn't like it. It started out at a price point up here of 82.37 today, just kind of start accelerating on the way down. It hasn't hit, though, the other biotechs. Bottom line, those other biotechs still hanging at those highs. If we go over to the IBB and we do look at that IBB, right now that's flat. That's bottom line minus 4 cents. That's a flat market. That IBB looks to me like it's still going to try to get up into these highs of 331 to 336. Let's go to ExxonMobil. We take a look at Exxon. Exxon is up 91 cents. That's caught a bid for sure. That looks like it's going to go test the 83.54 mark. You're at 82.35. Chevron, I believe the CEO of Chevron is retiring. Chevron has been a lot stronger than Exxon. Chevron is at 117.69. And there we go. Let's put this on a... Yeah, that's going after a swing high, going all the way back to December of 2016, which is 119. We've hit 118.13 today. Big number, no two ways about that. And I believe, let's just see. Yeah, so Chevron names ex-refining boss Worth CEO as Watson is going to retire. Mike Worth, who spent his entire career with Chevron, will succeed John Watson as chairman, chief executive officer of the world's third largest publicly traded oil company. Oil exploration recovers from a global oil market hammered by price-killing supply glut. The thing that's intriguing about the oil market, folks, is that when we actually take a look at it, you know, there's no doubt we got used to that $90 and $100 oil. If you bring this back, we bring this back, but you're going to see that that was just like a spike that was up there. You know, so 2000. Okay, so the last time that we traded oil at $50 was 2004. It oscillates, well, it runs to $78, 2006, gets down to 2007 to 50, then just takes off like a rocket ship. It goes from $50 up to 147 in 08. Crashes again in 08. Goes from 147 in July of 08. This is crazy. Down to $32 in December of 08. So that was the wipeout. And then what you had is this. Then oil made a nice comeback, right? So you made a comeback. 2008, you're at $32. 2011, well, let's just start. Yeah, end of 2010, you're at $80. And then this is where the oil companies themselves just got smoked. And I can see why, too. Between 2010 and 2014, 4 years, you know, oil was trading between $114 and $75. Now, that's big money. It's big money. And I suspect none of them ever thought it was going to basically get croaked again. Not only croaked, but down here and, you know, stay down here for a bit. We've been down at these lows now for almost 2 years. January of 2015 is when we got here. So that's what you have happening inside that oil business. Because what you have had is that you've had these equities, you know, they're refinancing a lot of their debt and trying to stay alive. And they're trying to stay alive, of course, because the last run-up, if oil does get up to that $60 level, bottom line, a lot of them are going to be able to breathe and breathe pretty good. 877-927-6648. Let's go take a look at a couple of the NDX equities. You get Amazon up $3. That had been up 10. 7, 5. It had about $8.50. That hasn't held price. Google, which has been strong, is up $3. You get Facebook. Facebook can't hold price. Facebook looks like it's going to be a nice big ABC down. You're only at about 47 cents. You're at $1.68. Apple has had its own problems, that's for sure. Apple's down $1.16. Now, what you have with Apple is that we're down $1.16, but that's coming back with light volume. You know, you finished closing the gap on Apple. That was the gap that it wanted to close is 150.22. You got down to 149.16, and you know we'll see how it hits the bottom. And is it going to build more cause to take that next leg down at 142? I mean, that's how it seems to be set up right now. But what it is doing is that when you back down at lighter volume, you know, if you test this area with tremendously lighter volume, kind of like how it's trading today, that'd be saying that that's going to be a new consolidation. So that's going to be a heads up. Microsoft. Let's go to Microsoft. Take a look at Microsoft. That's been a high flyer, still a high flyer, with $73. The high out there is 75. Microsoft has to actually get back inside 72.89 for lower price. Tomorrow, folks. Tomorrow? No. Saturday morning. Boston, Massachusetts. You want to go to a great workshop? Nadex is sponsoring. Great workshop, folks. We are getting on the plane tomorrow morning. We're going to be up there. Check it out on the front page of TFNN. It's at the Boston Marriott, which is in Burlington, Mass. That workshop starts at 7:45 in the morning. It's going to go till 1 in the afternoon. 7:45 to 8:30. You're going to get continental breakfast. 8:30 to 8:45. Dan Cook from Nadex is going to welcome remarks. My son Tommy's going to be talking about binaries and the spreads from 8:45 to 9. I'm going to be up there for an hour and a half, 9 to 10:30, talking quality volume, swing points, ABC structures, testing. Coffee break. Darryl Martin's going to be up for an additional hour and a half, and then Darryl and I will take questions for 45 minutes. So you want to be out there growling and prowl with all the tigers and tigresses, folks, go over to our website at TFNN. TFNN. You can sign up right now. We are making all the name tags right now. We're going to be right back, folks. You stay right there. We have the Dow Industrials right now trading up 31. NASDAQ is down 5. S&Ps are up $1.75, 1.75. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 32. You get the NASDAQ down 2. S&Ps are up 2. We take a look at the volumes out here coming into the close inside the indices. You have 510 million on NYSE. That's saying it's going to do about, 6 minutes. It'd be interesting if they could put 200 million. That thing might be, we'll see, 650 maybe. We take a look at the NASDAQ. We're at 1.6. That's going to do about 1.8. The SPYs out here today, SPYs are doing 32 million. Yesterday, you did 81 million. You failed on price and volume yesterday at the 250.32 level. We're going to close right up there. So what you have here, now what you have is that you're pushing actually into that level, and now you're pushing with tremendously lighter volume. So I suspect, you'll get it tested tomorrow, but that's not going to be a break, and that's on the daily. If we put this on the weekly, let's see what we have on the weekly. Oh, it's going to be a big number on the weekly, too. So the weekly, the benchmark is 378 million, and thus far we only did 224. So we'll see if it can hold price tomorrow. The volume certainly is not going to be there. We did 32 million today. That would be saying that it has to do about 110 million tomorrow. Now, it can do that. There's no doubt about that, but the probability of that is pretty low. We look at the NASDAQ composite. That's just a sideways move out here today. On the weekly basis, what we have is that you're still just in a consolidation. That's what it comes down to, basically. Hasn't been able to. 144.35. In order for the NDX 100 to be in the lower range, you have to get under 143.90. So you're talking about another 45 cents in order to be in that lower range. I do expect you're going to get there. Bottom line, we're not there yet. We go take a look at the IWM. Now, that was the break top side, and she's still up there. IWM actually another higher high today, up 44 cents, 147.88. You stay right there, folks. We'll be coming back with some numbers for you. Dow Industrials up 35. NASDAQ is down 1. S&Ps are up 2.5. We'll be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show. Today, Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You know, you guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others,
sure,
to, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day out there. Let's make it a great night. Let's take a look at one of our 4 agreements. Don't make assumptions. Be yourself around others. The biggest assumption that humans make is that everyone sees life the way we do. We assume that others think the way we think, feel the way we feel, judge the way we judge, and abuse the way we abuse. We are afraid to be ourselves around others because we think that others will judge us, victimize us, abuse us, and blame us as we do ourselves. Market-wise, let's take a look at it out here. We have the Dow Industrials up 40, NASDAQ flat. No, NASDAQ down 4. S&P's up 250. Gold contract up $2, trading $12.89 an ounce. Silver up 6 cents, $16.89 an ounce. Platinum down $1, $9.20 an ounce. Copper, ooh, that's a nice bid, up 5 cents, $2.97 a pound. We'll get into that copper market. HGZ7. Let's go see what happened with copper out here. So, HGZ7. Copper market. Okay, so we caught a bid in copper. Comes down to where it broke out from. Copper is something you want to really keep your eye on, too, because the last leg up on copper, it started at 251 4 months ago, went up to 317. Where it broke topside again was 289, and we come right out 290. This is a good scene, man. Okay, copper's going to go make a run for the highs again, 317. Big number. Oil, light sweet oil, down 57 cents, trading $51.57 a barrel. Notes, 10-year note, up 3 ticks, 125.17. 30-year bonds down 5 ticks, 152.25. Now, both notes and bonds, folks, they're in an ABC structure on the way down. If we do take a look at the 30-year, your price projection is the last swing low that was established out here on July 7th. Right now, we are at 152.24. The 150.11 is your ABC structure on the way down. Yesterday, you took out your B, you took it out with volume, had wide price spread, had all of the above. That being said, the 30-year folks would have to go down an additional 3 points and 11 ticks in order to break a major swing point. And we haven't broken a major swing point since 2000. Yes, you heard that right, 2000. It's phenomenal, actually. What that means specifically is that rates have continued to go down. King dollar closed out 92.990. You've done 24,000 contracts. The swing point it was going for was August 16th. That high there is 93,840. The low of that high is 93,180. So what do? You go into it, you had lighter volume, we closed underneath it as we closed underneath the highs of yesterday and the highs of the day before. So what that's setting up right now is that is setting up that we're going to go after the day of strength, which the last day of strength was on Monday. No, not Monday. Let's see. September 20th. 92,495. So down about another 400 ticks. Now, if we get into that area and you have any volume at all, bottom line, this very well could be just a small B to a C of a much larger ABC structure on the way down. Because what is sticking out like a sore thumb is the 88 level, which was the highs of 2008 and 2010. Let's go take a look at Bitcoin, because I want to show you something in Bitcoin. There was a lot of news today in Bitcoin. So Bitcoin traded flat also, which is really unusual for Bitcoin. You got a high out there of 42.75. You're at 41.50. The high in Bitcoin is 49.21. That being said, you had one of the companies pull back their they were trying to get listed on the NYSE in order to basically trade. More so, though, okay? This is what you have out here. So if we go over to, and this is the whole deal about what happened if you were around in the internet era of all you had to do for a public company is put out a press release and put out that release saying that, hey, guess what? We're going to be an internet company now. Well, if we go over to goldmoney.com, goldmoney.com is a Canadian company, financial technology company that operates gold-based savings and payment networks, right? Bottom line, they put out a press release, and inside that press release, they were talking about, and that's Chef's company. I didn't know that. Okay, cool. Inside that company, they were talking about that what they're going to do now is that you are going to be able to buy and sell cryptocurrencies. Okay, so bottom line, stock closed yesterday at traded 375 yesterday. Today, 464. That's not the only one, though. Check this out. Because I'm trying to figure out whether they followed Overstock. Because what happened is that Overstock.com, came out yesterday, and Overstock is up 15 cents today. Well, watch what happened with Overstock. Overstock yesterday, folks, went from a price point of $23 up to $29 $9. And that Overstock app came out yesterday, and they were talking about announcing a launch of a Security and Exchange Commission compliant digital token exchange. So digital token exchanges are huge, folks. That's the bottom line. Overstock did it yesterday. Gold Money did it today. We'll find out who's going to do it tomorrow. The kicker and the point of the story more than anything is that is this a bubble? Meaning, basically, are we all going to be trading cryptocurrencies now? That's kind of how this thing's going to shake out. 877-927-6648. Some of the higher volume stocks, and this was a low volume market out here today. You had Chesapeake Energy off 7. You had Ford up 1. Applied Materials, that was a mover. That was up $1.75. Gilead Science was down $2.95. You stay right there, folks. We come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go to Mike in Loveland, Colorado. Hey, Mike, what's going on?
Hey, Tom. How you doing today?
I'm doing great, man. Yourself?
It's a beautiful day. It's cool, cloudy, and wet.
That's nice. That's right. The fall's here, right?
Fall is here. The colors are changing. It's a beautiful time to be here.
That's beautiful, man. So, what are we going to look at today?
Yeah, I was just looking at a chart of XHB, the Home Builders ETF, and yesterday we blew away the previous swing point with volume, but when you switch to a weekly chart, the volume is anemic. So I wanted to get your thoughts, just
okay, cool.
Out of curiosity.
Yeah, no, let's take a look at it. So you have the XHB, and inside the XHB, folks, the weighting structures are pretty even. They're not all home builders, but they have everything to do with the home. Williams-Sonoma is the largest weighting, 4.8. Whirlpool, 4.6. Now you get a home builder, D.H. Horton, 4.6. Johnson Controls, that's controlling the house, 4.5. Pluti, which is a home builder, 4.5. Masco, which is the wallboard, the floors, that's 4.5. Lennar is a home builder. Lowe's is, of course, Lowe's, 4.4. Home Depot, 4.4. And NVR, that's a monster home builder, that's 4.2. So you can see it's kind of lined up pretty good. So we take a look at this. Okay, so let me. Oh, it's interesting. You did good volume rate today, too. Interesting. Okay, so today you got up and over. Let's put this on a weekly. Boy, this is right across the, so 10.9 million. Well, what you have is this, is that, you know, we have one more day left, right?
Right.
It doesn't look like it's going to do it, but it could. You know, we did 2 million today. You're at 6.5. That would be 8.5, but you are talking, you know, 10.9. Let me bring this back further. Let me see. I'll put it on a monthly for a second. Yeah, so on a monthly, it's going to be anemic also. 91 million, and you're going to do 33. Yeah.
and rates are going up, and that's not good for home builders.
No, it's not. Well, here, let's go over here and look at this for a second. So this is where, I'm going to pull up the 10-year, because it's rates, folks, for all of us getting mortgages, home builders, all of the above, have everything to do with the 10-year. Now, when we take a look at this 10-year, I'll just show you, we're not right now close to, watch this, if I put this up for a year, what you're going to see is that rates are going to have to go up a lot more. See, we're right in the middle of the range for the whole past year. The low for the year, going back 12 months this is now, is 1.56. Okay. The high is 2.6. So when we were at 2.6, you know, the building industry didn't get hurt and the real estate market didn't get hurt.
Yeah.
You know, so it's going to have to go a lot further than that. But I absolutely, you know, agree with what you're saying. The real kick is going to be, you know, if in fact these rates continue to go higher, that anything that is rate sensitive is going to get hurt. You know, I was listening to Basil this morning, and we're going up to Boston to do this workshop over the weekend. And Boston, folks, has been on fire, the real estate market, in an incredible way for a long period of time. And it has to do with Boston's a very small city, and they have so many high-paying jobs up there. It's unbelievable. I mean, GE just moved their headquarters up there. Amazon has 400,000 square feet up there, and they're both in South Boston now. So he was talking about bidding wars up there. Now, it would seem that if rates do start going up, the higher ends will start getting hurt first. And New York, I suspect, New York is getting soft right now anyway. I mean, so, you know, the rental market. But it's something to keep your eye on for sure, man, you know.
Yeah, you to say a quote that you once said, it'll keep going higher until it doesn't.
Well, so watch. Now, for real estate, and folks, I'm in real estate hand over fist. We have the fund. We get a lot of houses. We're building a lot of houses. Right now, in St. Petersburg, you can still buy whatever you want, and they still cash flow. So we're not anywhere close to what a Boston is. Boston does not cash flow. Boston blows my mind, man. In South Boston, where I grew up, it's $600 a foot. Think $600 a foot. That's 1,000 square feet, folks, for 600 grand. And let me tell you something. We're not talking like the Taj Mahal here.
Yeah.
So when you're at that level, then yeah, you got to make sure that someone else is going to buy it. Cash flow wise, we'll see. I mean, because what's going to be intriguing here is that what is the real interest rate? And what that's all about, folks, is that you take the interest rate, then you take the inflation rate and say, okay, how much you paying for money, and how much is that hard asset going up? But it's, game is on here on that deal.
I think you would probably agree that we should, if you don't buy anything until Tuesday, just so that we get through the window dressing and the end of the quarter, and
yes,
and by Tuesday we should have a clear picture of whether we're going up or down.
No, I don't know if it would be a clear picture.
Yeah, that's true. You're right.
My picture hasn't been too clear lately. It was as we talk about going up and down. This small cap deal, small caps broke out yesterday in an incredible way, folks. So it's like I'm looking at that like, wow, man. I mean, is this thing, that's a valid break after a consolidation from December of 2016. So if this thing's going to do a leg, that means 157. That'd be like, okay, so what's coming down the pike that is going to be so great? And it just maybe, interest rates are going to stay low. The tax break deal doesn't seem to me to be a game changer. What's blowing my mind about that whole deal is that they're claiming that they're not going to let the folks that have state taxes write that off. And I'm trying to figure out, how are you for lower taxes, but yet you're going to penalize people, you raise your taxes on them. And it's like, okay, well, there's Republicans in those states too that have representatives. They're never going to go for that. That's like, what are you, crazy? I mean, so I'm trying to figure out, are they just, it seems like it's set up again for another war. So that's telling me that, okay, nothing's going to happen in 90 days. So,
yeah, and if we lower taxes, it just means our national debt will go up faster.
Right, and that supposedly is what many of the conservative folks are against. But we'll see how that shakes out when it's coming down. I think this is going to come down again, folks, to, if you remember the whole Mexico thing and the TAF of Mexico and all that. This is going to come down to large corporations. And I think they already set it up wrong, because they're going to have large corporations fighting each other. And guess what? The large corporations are going to win. That means nothing gets done. Because the large corporations, they're the biggest animals out there. They only have to pay off, 450 people, so.
Yeah.
Wow.
Thanks, Tom.
Have a great one, man. Have a safe one. You stay right there, folks. We'll be coming right back. You had the Dow finished up 40, NASDAQ down 2, S&P's up 3.5. We're going to be right back, folks.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Health and Human Services Secretary Tom Price, bottom line, looks like he's going to come up with some personal money to pay for all his jet trips if he, I don't know if he wants to keep his job, but that's what it looks like right here. Health and Human Services Secretary Tom Price said in a statement that he's going to write a personal check to the U.S. Treasury for the expenses on my travel. I'm going to travel on private charter planes. The taxpayers won't pay a dime for my seat on those planes. Bottom line, he's going to come up with a lot of money, folks, because if you go over how many private jets that he's taken and what the cost of a private jet is, it's pretty intense. But bottom line, I suspect after Trump came out last night and said, yeah, he's not happy with it also, I suspect there's probably just a deal that was made. If you want to keep your job, guess what? Write that check, man. So it's going to get done. I don't know if that's going to stop the Inspector General out there, but bottom line is that he's going to come up with the bread. Let's go take a look at the volume-wise out here. So NYSE did 767 million, so they got some volume. So it was 530 after the bell, and the Nasdaq Composite did 1.8 billion. We go over and we take a look at the QQQs. QQQs traded out here sideways, 24 million, no big deal there. There's no movement whatsoever. This consolidation's still in place. That's what it comes down to. So the benchmark in the Qs are 145.96. That's the number you want to keep your eye on. In the SPYs look tomorrow like they're going to basically test that high again. The high of yesterday was 250.49. The other benchmark is oh, look at this. Okay, so this is cool. So what the SPYs had done yesterday is that the SPYs got over the high that was established on September 14th, closed underneath it, and had 20 million lighter shares. Today what we did, we closed over that high. We closed over the high with 43 million versus 95. The high that I suspect we're going to go after tomorrow is going to be the high of yesterday, which is that 250.49 price area. The XAU, let's go into the gold market because I suspect what we're going to get some action out here in gold tomorrow. Gold, XAU is up 94 cents, $85.69 now. 86.65 is the number. If you're a bull, you want to see it get back inside. What that number is, folks, is that's how when it broke topside on the 28th of August. What the gold market has done, the equity as well as the metal market, is that it came back to its breakout area. It did do that with lighter volume. Now what you're looking at you're looking for wide price spread, accelerated volume in order to get to higher price. We did 36 million on the breakout. You came back with 30 million. You tested it again with 25 million. Bottom line, if you get back inside that, then you get a shot that you're going to be right at those highs. The Gold Bugs Index. What do we have with the Gold Bugs Index? Same type of setup as the XAU. Gold Bugs Index out here. We're at 198.46. You're going to need a little more juice, but the Gold Bugs Index, because it's a much higher number, does move more number-wise. You got to get back inside 201.99. Same type of setup, meaning it came down, tested, had lighter volume, had all of the above. The GDX, which I know a lot of us trade out here, GDX up 17 cents. That came back to the breakout area of 23.56. That's the number you got to keep your eye on. We're only at 23.16 right now. We had done the test. You tested with 67 million, which was going into 83. Then what you did, and this is really positive, you tested again with 39. You tested again with 49. That correlation is still going into the 83. Now you need wide price spread, accelerated volume in order to get the higher price. ABX, which is the largest weighting structure inside the GBX. We'll take a look at, okay, so this doesn't look that great. We're at 1620. You know, you're back on lighter volume, but this hasn't rejected lower price yet, so that's not great for the GDX. Newmont Mining, which is and has been pretty strong. Yeah, that's a good setup. Okay, so Newmont's in the larger range. That's a good indication that that baby wants to go after its highs again, which is only a few dollars higher. Franco-Nevada, we're going to take a look at a couple of the royalty stocks because that's how give you an indication as to what the actual metal wants to do. Franco-Nevada, that has to catch a bid. You know, not bad today, but has to catch a bid. Not a huge contraction off the highs, but we still need strength. Royal Gold, same setup. So inside that metals market, well, actually, let's go take a look at, I want to take a look at silver, too. If we go to Pan American Silver first, that needs to catch a bid. Hecla, that needs to catch a bid. And First Majestic. First Majestic's not bad, but that got smoked. Yeah, it's so what you have there is that you have the aspect that the silver equities don't look that great compared to a couple of the gold equities. Let's go to look at Gold Corp. Yeah, Gold Corp needs strength too. You know, Gold Corp has been testing the lows and have been rejecting that lows, but now that also needs a sign of strength. Take a look at some of the South African equities. That correlation, of course, is with the Rand dollar. Harmony needs to catch a bid also. Yeah, they all got to catch a bid. GFI is not a bad, that Goldfield's not a bad setup, actually. Yeah, not a bad setup. Amazon, let's go over to Amazon. So picture this, folks. You're coming into the end of the quarter, end of the month, end of the quarter. What we're going to be hearing a lot about as we get into October is the holidays, shopping, all of the above. The first discount across the retail business was done by Walmart, and what Walmart did, it was their Jet.com, which they're relying on to, do a huge amount of internet business to compete with Amazon. What Jet.com did is that they offer 5% cash back on orders made between September 18th and October 29th that can be applied to holiday purchases. Shoppers can earn up to $50 in so-called Jet Cash that can be redeemed on the site beginning November 13th. So what you have is this, is that they want you to be shopping, right now, September 18th, started 10 days ago, going up to October 29th. They give you kickbacks in the aspect of cash, Jet Cash that is, and hope that you only can use it coming back to Jet.com. There's going to be a lot of deals out there. Amazon this morning came out with their, I believe, the Echo, and they brought the price down dramatically on the Echo. And what they also did is that they upgraded that whole deal. And I mean, they want all of us living, breathing the Echo. You stay right there, folks. We'll be coming right back. And of course, don't forget, it's Thursday. We got our man, Mr. Andy Heck, coming up next. 5 to 6. Get it right on your cell phone, TFNN.com. We're going to be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at the XLE. So you have the oil market. Oil market has been staying up at highs, folks. XLE is trading $68.49. This has had quite a run. You know, the August 18th, you're at 61, you're at 68.49. Take a look at this. We put this on a weekly basis. It doesn't look as great because what we had done is that we went from $78 in 16 down to 61 percentage-wise. Let's see what type of retracement we're doing here. Okay, so that's pretty good. You just went over 0.382, so that's saying you can make a 5.0, which is $70. That being said, so on a weekly basis, 48 million we've done. They do about 11, 12 million a day. it looks like it's going to make ICE. So ICE is laid out at $70.65, approximately $77.65. That can get up to that level. The real question is going to be, does it get any juice coming up to that level? Thus far, it's going to need quite a bit compared to what it's at right now. We've done 48 million, and you are going into, in fact, we made it to today. $68.90 was today. $68.89 is the low of where we came down from 72 to 68 in March of 2017. So that's where the test is going to be made, folks. Thus far, it looks like that's going to be about it. If we go to the larger weighting structures, we had Exxon Mobil move today. We take a look at that because the XLE is predicated on that and Chevron. Yeah, this is coming up to ICE also. Okay, so that's pretty cool. So we're at 82, and ICE is really laid out. You can about 82.54. Chevron, CVX. That's been much more powerful than Exxon. Well, Chevron is powerful, man. This is a whole different setup. This is intriguing. Yeah, so Chevron is almost at its highs of 2016, and you actually have some volume behind the move. Let me put this, I'm going to put this on a 5-year monthly. So 5-year monthly, it's going to have the move too. In fact, it's strong on a 5-year monthly. Okay, so whatever's happening with Chevron looks to me like this could be a big ABC up, actually. Your A point on this is $70 ballparking. Your B point's approximately 119. So you're talking almost $50, which would give you a 153, which 135 was the high. Wow. Okay, so this is powerful. What's going to be intriguing there is that if in fact oil's going to run and Chevron's going to run, the real kicker is the dollar in a very large ABC structure on the way down. Because what has been stuck out like a sore pin is the 88 area inside the dollar index. And if you break that 88 area, folks, you have game at 81, which would be pretty incredible. You know, but bottom line is that's the number. We're in nowhere land right now. No, you know, you broke the consolidation once you broke the 93.50 mark. You have support from 2008, 2010 at the 87.50 to 88 area. You break that, and then you are down to 72. You know, so that would take all commodities and get them much higher. But now what that would also say is that would also be saying that our interest rate structure is not going to be going up, you know, because the rate structure in itself, bottom line, with a weak dollar, they wouldn't be able to do a thing. That would be saying that there's something inside the economy that's weak versus strong. In that context, let's go over and take a look at the euro. Excuse me, folks. So the euro is at 117 to the U.S. dollar. And the way this is set up, yeah, see, this is wild, man. This thing is set up to go up to like 138. If this is a large, it's just the, of course, it's just the opposite of looking at the dollar index, because the euro is 60% of the dollar index. So you get $1.03 down the bottom, you get $1.20 at the top. If this is an ABC up, you get 18 cents, which would get you to 135, 136 level. See, this thing is set up right now. This is going to get intriguing watching this over the next week, week and a half. Because if this is an ABC up, and because the euro came down so fast from May of 2014, we're at 133. This is a straight line move down. We went from 139 all the way down to 104. It was vicious, folks, okay? That thing came down fast, furious, all of the above in an incredible way. And, you know, when we talk currencies, don't forget, if you happen to be in the CD market, come over to our website, TFNN, and you hit that Everbank banner. Today is the last funding day for the Market Safe CD, but what they do have out here all over the place, and they always have, folks, they have their Market Pledge, and what that Market Pledge is all about, that pledge is that they pay in the top 5% of interest in the country, meaning that the top, 95% is below them as to what they pay. What they also have is that they have these foreign currency accounts that you can open a foreign currency account. Those currency accounts, bottom line, you're going to give them dollars. You say, okay, I'll give you dollars. I want you to put that in euros. Bottom line, great way to diversify inside the marketplace without trading. That's the real key here, without trading. Without trading, without fees, you're not guaranteed a profit, that's for sure. But bottom line, what you are guaranteed is that you're going to get great service, and they have a lot of different products like that you can diversify outside the U.S. dollar without trading that whole aspect. If you're going to Europe, let's say you're going to Europe, you're going to spend 10 grand next year. If you think that the euro is going to go up, the way to do it, if you've allocated so much money, allocate it inside a euro account, giving them U.S. dollars so that you know that your cost, your expenses are fixed. No matter what happens, the dollar can go up, the dollar can go down. You have your money in euros, you know how much you have to spend, because what happens with currency fluctuations, which is really cool to wrap your head around, it doesn't hurt the countries as much. Like if the dollar goes to 80, which is done before, and go to 70, folks, we don't feel the difference here when we're just buying stuff in the United States. It's when you go outside the United States. Now, just the opposite way. Our dollar goes to the moon. What does happen is that we still don't feel difference in the United States, but what does happen is that when we go outside the United States, everything else feels a lot less expensive. And what has just happened in Canada, they have felt that tremendously, meaning that their currency had been weak for years and years and years, got strong like bull, and then got weak again. Right now, it's $1.24 Canadian to $1 US. You stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And, we take a look at the airline industry, folks. They've got us in there like cattle cars now. Well, check this out. American Airlines, they're going to really stuff us in these planes. They're going to add more seats to their single-aisle jetliners as part of an effort to boost $1.4 billion in the next few years. Their 737-800 is going to be revamped to fit 12 more passengers, while the Airbus A321 is going to carry 9 more, according to a presentation today. Now, check this out. We already know we're cattle in these things, right? But bottom line, they're gonna stick more in. But listen, this is a quote that you got to wrap your head around. The plan. I'll do the quote in a second. The plan is almost double Americans' target for revenue gains by 2021 as the company steps up the effort to expand sales amid rising fuel costs and heightened competition from heavy discounters. While a new fare war broke out last summer among U.S. airlines, Chief Executive Officer Doug Parker reaffirmed his view that industry consolidation will enable carriers to post steady profits and leave behind years of boom-bust cycles. Now, here's the quote, folks, okay? You're going to love this. "I don't think we're ever going to lose money again," he said at an American Investors Day in Grapevine, Texas today. "This is an airline and an industry that will be profitable in good and bad years." That, folks, is insane. The airline business, okay, here, I got to bring this up quick, because the airline business, the way that the airlines themselves actually bring money to the bottom line is that they got to keep rolling their planes, and the okay, so this one here, yeah, I got to let me bring UA up, because that American, they had already gone bankrupt so many times that it was a new chart. Yeah, United right now is at 61. Yeah, probably making its way to 46. Bottom line, it's quite a quote. Always remember, whatever you think about, you bring about. Whatever you focus on grows. You stay right there, folks. I'm Mr. Andy Hex, coming up. TFNN.com. Hit Tiger TV. Have a great one, folks. Have a safe one. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.